Nobody is going to give you money to manage if you don't seem knowledgeable about what is actually happening in the economy and able to make some decisions around it. If you want to go deeper into the money system, you have to be able to communicate with people who are not going to make it easy on you. Hey guys, welcome. I am Oren Klaff. It is almost Thanksgiving. And what does that mean this time of year? It means 8 out of 10 chances you have a cold like I do. But as I say to my son, if it's raining and it's cold out or we're not feeling well, what do we do? 11 years old. And his answer is, we go sit on the couch. No, sir. Asher, son, we don't. We go run. We go do a workout. Why? I don't know. Just keep working and it'll work itself out. So I'm here with a cold, running the game of money. I have a lot to talk about. You guys hear me talk about Asher a lot because I learn a lot about myself through the lessons I go through with him. We recently went, when I say recently, 2 weeks ago, we went to Las Vegas for a hockey tournament that they were in. And so the junior goals, and he's at the hockey tournament. It's the last game of the tournament and they are down 1-3. So his team, my son, Asher, 11 years old, plays defense. They're down 1-3, 3 minutes left in the game. This is the championship game from the whole tournament, and I am so mad. D is not going great. Offense is not going great. I have 2 GoPros up. I got my big camera out. I want to take a picture of this winning this tournament. There's no reason they shouldn't win it against a Las Vegas team, and that's it. 3 minutes left, and I'm like, I'm fed up. Throw my hands up in the air. Take down my 2 GoPros, pack up my camera, take the lens off, put it in the camera bag, and start packing everything away. And then I hear a screaming and yelling and stomping. They score a goal. Oh, man. How did I miss getting that one on tape? Right? Frustrating. Anyway, now my GoPros are off. They're in the bag. My camera is the lens. I got this big camera. The lens is dismantled from the main body, this DSLR Nikon Z9 camera with the 70 to 2.4 the aperture lens, whatever, like all this heavy duty equipment and the tripod, it's all packed away. 2 minutes left and now it's 2-3 and more screaming and yelling. Anyway, they end up winning the game with 3 minutes left, scoring the goals, winning the game. I have no camera, no video of it. They run into the glove. Have you ever seen a hockey game when they win? Gloves flying up in the air, sticks spread around the ice, the kids in a big cluster. It's like the photo moment of all photo moments. If there's something you don't want to miss, it's that. And so what happened is I gave up. How many notes? Do you know how many times I've talked to him and said, never give up? Every day, like always believe. And what did I do? Give up. So you got to watch yourself. A lot of lessons can be learned from just day-to-day life. So I'm always telling myself, work hard and never give up. And there I did. I gave up at the wrong moment and don't have that photo. All right. But let's not make that mistake in business. I am out for debt right now for one of my portfolio companies. I know we're looking for a $3-5 million equipment line. Not a lot, but it's meaningful. I'm talking to debt providers, getting a bunch of maybes, no's. It's Thanksgiving. It's Christmas time, working through this. What happens is, and I want you to understand, when you go out for money, which you do have to get money into your business. I don't care if you're a sales guy. I don't care if you're the sales manager. I don't care if you're the COO, CFO, CEO, investor, board member, whatever. Money has got to come into your businesses. So there's businesses, lots of people I know who are raising money and also give money out. So people who are loaning money out are also raising money. What? Does that make any sense? People who are giving money out are also raising money. Why don't they just, it's called a bank. It's called a hedge fund. It's called a private equity group. It's called an investment group, right? You're raising money cheap and you're putting money out expensive. You're making a spread, right? Or maybe you're raising long-term money and you're putting out short-term. You're looking for a spread. So everybody is raising capital that I know, and they're also putting money out. And a lot of them think about the macros, what is happening in the macro environment. And I also think you should know what's happening in the macro environment. Trump is in, they got a new Treasury Secretary is coming in. They have the George Soros commodity and capital markets and currency trading mentality. What is going to happen? What is going to happen in the economy going forward? That's the macro. What's going to happen in your business is the micro. But I want to take you back and thinking about it this way. In 2021, what is it, 2024, 2025 now? So 4 years ago, Larry Summers, who was the Treasury Secretary, warned that Biden's $1.9 trillion stimulus was too big for the economy. He said the economy is already stretched, right? You can't just stuff another $2 trillion into the 2021 economy, right? And inflation surged when they did that. Inflation went up, and they were like, you put $2 trillion in the economy, inflation is going to go up. But even as the government kept spending and the economy grew hotter, inflation didn't continue growing up. So they started putting, inflation went up when they put $2 trillion in the economy. They couldn't slow it down. They continued putting money in the economy, and inflation was supposed to go up, but it didn't. It started cooling. Why? Turns out inflation is not just about spending. It has to do with supply chain issues. It has to do with price spikes, right? And once supply chain and things got back online, and these sort of cars, so you couldn't get these computer chips for trucks and cars because of supply chain. And so there were spikes in pricing on cars. If you remember, car prices went out of control. Car prices went out of control. So inflation, the spikes worked out, inflation eased. So then the Fed hiked interest rates aggressively, expecting to slow the economy. How do you slow the economy? You spike interest rates. Make sense? Think about it. So if you give people 1% money, so you can borrow $100,000 at 1%, you go out and spend it because it's such cheap money to pay back. Now you raise the cost of that money from 1% to 7%, and you think a lot more about spending it, and it's harder to get money overall. But the economy did not slow. The economy stayed strong, and the recession that everybody thought was going to happen from all of this never arrived, right? And it's not just that. The job market has defied expectations. Economic growth has defied expectations. Predictions of doom, whether tied to money supply, unemployment, productivity, have not come true, fallen flat, right? Even economists admit their models don't work in the complexity of today's economy. There's other factors like immigration, productivity gains, AI is going to affect the economy in some way, and they reshaped what economists' models did and worked. So the point I'm trying to make to you is that simple narratives, simple ideas, hey, if you raise rates, it will cool inflation. If you put $2 trillion in the economy, it's going to send inflation rampant. Those big spending equals endless inflation. High rates slow growth, right? Those big narratives don't seem to work anymore for such a complex financial mechanism as our economy. So if you're in the middle market, if you're an entrepreneur, CFO, CEO, CMO, running a company, but even if you're a sales guy, you cannot just run by these big Warren Buffett truisms anymore, right? Well, the inflation's going up, the economy's going to cool, the government is printing money, inflation is going to go up. The economy, the markets is too complex for those to be true. So what does that mean to you? One is you should be aware of what's happening in the macro economy. If these things don't matter, should you ignore them? No, you still have to know what's going on, because nobody is going to give you money to manage if you don't seem knowledgeable about what is actually happening in the economy and able to make some decisions around it. But very likely you're listening to me not because you run a Fortune 500 company, Fortune 100 company. You're not running a $1.3 billion business. You're not a P&L responsibility for $2 billion. Very likely you're inside of a $10 to $50 million business, maybe a $75 to $125 million business, or you're just somebody who wants to grow the business from $500,000 to $1.5 million. That's who you are, probably, if you're listening to this Game of Money podcast with Oren Klaff. Just that's who it tends to be. And so what I want you to understand is, while these major macro shifts are happening in the economy, right? In Japan, interest rates are like 0%, 1%. In the United States are 5.5%. Add 3% to that, your money rate is 8 to 11%. What should you do? I don't think you should make the decision for the Fed to lower interest rates so mortgages come down, so credit card rates come down, so loans come down, and loans become more available, right? That is just really what I would call being in the sheep economy, waiting for the macros to line up with your needs. What I want to encourage you to do is go deeper financial reach into the deep economy where finance is. So, for example, if you needed a new Audi, today, you'd have to do what I have to do. You have to go down to an Audi dealership, and you have to pick out the one you want, and they're going to have a MSRP, manufacturer's suggested retail price, say $80,000. I don't know what model you're getting. So could just call it a $100,000. So you're getting a $100,000 Audi. You don't really have any, that's the price of it. And you're awash in the sheep economy in the macro. But imagine you knew the guy was a friend of yours or a colleague of yours who owned the dealership. He'd be like, yeah, don't worry about the MSRP, right? I'm going to get it to you at cost. So let's say you're now the person who owns a dealership, right? You're not getting it at cost. You can apply, let's say you wanted an Audi. You would apply some rebates. You would call Audi and say, do you have anything left over from last year? You could probably get that $100,000 Audi for $60,000 if you worked it and you had deeper reach into the automotive distribution system. Maybe you could call up another dealer, run a trade. Maybe you could get it for free, right? Very likely, if you're an Audi dealer and you actually want to be driving an Audi, you're not paying $100,000, you're not paying $80,000. There's some kind of program that you can get into. There's some kind of discovery method where you can get deep into the automotive system and get that Audi for free or cheap. That same metaphor works, of course, for everything, but it works for money. So there is a money system, and the deeper you are in the money system, the more access and the cheaper money you can get. So what does that look like? So I want to tell you what I do when I'm looking for money. There's retail money or sheep money. Let's say, I don't know, for your business, you need a $1 million loan, $500,000 loan, $15 million loan, right? Some debt. I don't care what it is. The sheep economy is you go down to Bank of America, or you go to JP Morgan, you work with the manager there, you give them your financials, they do some underwriting, they come up with a loan rate, and then you've got loan covenants, you've got a payback period, and that's fine. You get the financing that you need from your business at really retail. But that same loan you could materialize that same loan in the deep economy with, some people might call it creative capital solutions, but I would want to go deeper and deeper into the finance system. So that $1 million loan today would probably cost you 12 to 14% if you had a good business, right? I would want to get deeper and deeper into the financial economic system to where I could get that loan for 4%, even when the Fed rate is 5.5%. So cheaper money than even the Fed would give a major bank, right? That's what I'd be looking for. So how would I do that, right? So there's people today who need to get money out to put to work, right? So they've got capital, they don't want the capital in, and they want to get that capital work. So who are those people, right? So here's the perspective that you can think of. There are individuals who have got an overhang of capital, right? So maybe they got a huge bonus, maybe they sold a company. Especially when somebody sells a company, they want to put capital out and put it to work for them. So maybe you offer them a loan of 4% current pay and 4% accrued, and they get a little equity kicker in your company, right? So a little bit of equity kicker, a 4% current pay, 4% accrued for 8% total, maybe 12% overall with the equity kicker. I would put that together and I would start floating that out there to people and look to get that plugged deeper into the finance system than retail capital. Why are you not doing that today? Why is that difficult to do? One reason, it is the communication, right? What prevents you from getting deeper into the finance system, and this is really what I want to leave you from. You can walk into JP Morgan, Bank of America, some kind of private loan company that advertises, and you say, hey guys, I have a business. We make widgets, right? And we have SaaS software. We make widgets and we have software. We do $10 million. We're looking for a loan to grow our business. And they go, great, welcome, come on in. And then somebody, do you have a deck? Do you have a pro forma? Do you have a P&L? Do you have comparables? Do you know what kind of debt product you're looking for? How have you securitized the company up to now? What does the cap table look like? What does a 3-year pro forma look like? What's the board composition? What does tax treasury look like? If you're to sell the business, who would you sell it to? What is your downside protection in the business? And what does your competitive set look like? And what will be your growth over 3 years? What are your headwinds? What are your tailwinds? So they'll ask all these questions and you'll go, I don't know. And they'll go, great, no problem. They're going to have to build all of that for you. That's why you're going to pay 12%, 14%. It's retail. Retail means you can just walk in and say, I need some money. And they're going to go, great, we'll help you build the package. We'll help you step into the money. We'll ask you questions. We'll make this easy on you. But they're going to get paid for making it easy on you. If you want to go deeper into the money system, you have to be able to communicate with people who are not going to make it easy on you. So if you go one layer deeper than Bank of America, JP Morgan, say that's some private capital consortiums that you get introduced to, right? At minimum, they're going to say, hey, we'd like to see 3 years of historical tax returns. We'd like to see 3-year, 4-year historical model merged into a forward-looking pro forma with assumptions on it. And that's a minimum, right? If you're scratching your head and you don't have that, you cannot talk to even one layer deeper in the economic system. This is not a practicum where I'm going to teach you how to do all that. We do that somewhere else. We can do that at a different date. You guys don't need a metaphor. You don't need an analogy. The deeper you get into the economic system, the deep economy, the deeper you get, the less they're going to help you with your package. If you want to go all the way down to 4% money, you better have everything in an easy to read data room. You better have an investment thesis. You better have a good story around it. And you better be willing to talk to people every day about it for 30 or 60 days. Why would you go through all that effort? It depends. If you want cheap money that allows you to grow your business with less stress, right? And you want higher quality access to capital, and you don't want to be stuck at banks tied up at retail capital, you have to be able to go deeper and deeper into the deep economy where there is just at some point just a flow of capital, right? That's the capital that I get into. I don't go and make a pitch to a committee. I don't go and make a pitch to a board of directors. I don't have somebody reviewing my thing. I just stick my bucket into the flow of liquid capital and I extract the capital I need at some prearranged price. And then I pull that capital all the way out of the deep well of the deep economy and I dunk it into my business. That is, to me, it's harder because I have to go prepare some things to be able to communicate to the liquid flow of capital in the deep economy, but I go through that effort so I can get cheap capital to grow my business. So do you want 12, 14, 18% capital with tons of covenants and all kinds of debt service coverages and scrutiny on top of you? Or do you want to just stick your bucket into the primordial ooze of the finance system way down and extract capital for use of your business? How do you get there? Number one, awareness. There is a deep economy in which capital flows quite freely if you can talk to it. We talk about this all the time. So number one, awareness. The deep economy with liquid capital that you can access exists. Even if you're in sales, you want to start a business or you want to help your own company raise money, awareness of that is number one. Second is get some visibility on it. So of course you should be trying to join some of the groups we're in where we show the deals where we are sticking our bucket into the liquid market and pulling money out to then put that money into our businesses. So awareness, one. Two, visibility on what other people are doing. And third, experience with doing it yourself. So this is the awareness part. There is a deep economy. Get out of the sheep economy and continue dipping in here into the game of money. I'm going to show you how to get into the liquid parts of the capital markets. If you're looking for a way to pitch your deal, if you're looking for more and pitch anything, don't worry, that's coming. But I want to make you aware that I'm not going to call it easy money, but I'm going to call it, because you have to work for it, but there is ways to get out of giving your money to a bank, asking banks for money, go asking for a loan group, pitching for venture capital. That is, I'm not going to use the word sucker. I'm not going to use the word retail. I'm not going to use the word expensive. I'm not going to use the word lazy, because different strokes for different folks. But if you want access to money, get down out of the sheep economy into the deep economy. I'm going to keep talking about this. I'm going to keep showing you how to do it until you can do it as well as we're able to here. All right, that's it for today. By the way, this game of money is sponsored by Pitch Anything. Buy another copy of Pitch Anything. I don't care if you have 4 copies, 5 copies. Give all 5 of your copies to somewhere else. Buy a fresh new copy. And then when we meet up, I'll be happy to sign it for you. And remember always that when I sign your copy of Pitch Anything, it will be fun and it'll be something that we have between us. So buy another copy of Pitch Anything. It sponsors this Game of Money podcast. And also, it's good for you to spread your copies out to other people so they can win the same way that you have very likely won from reading that book. See you next time. Game of Money.